Market structure is one of the key factors in trading. It's one of the factors that will determine if you'll be able to catch a trade like this or not. In this video, I'm going to be teaching you how I personally read market structure, and I've been using this method for the past 3 years. So sit back, take a note, let's get it.
Oh yeah, I stayed up, put my head on and I prayed up, I worked hard and never gave up, how the struggle motivated.
Before we hop into the chart, I want to briefly explain what is market structure. To keep it simple, market structure is simply the way the market moves. And understanding this is very crucial to your success as a trader. It doesn't matter what you trade, be it supply and demand, SMC, Fibonacci, whatever you trade, you need market structure because it's literally the foundation to the movement of the market. Understanding market structure is going to save you from a lot of losses. It's going to keep you on the right side of the trend. Market structure and trend goes hand in hand, and I'm going to explain further in the chart.
Guys, the first thing you need to know about market structure is that the market moves in 3 different ways, which is uptrend, consolidation, and downtrend. When it's in uptrend, it creates higher highs, higher lows, higher highs, higher lows. And when it's in downtrend, it creates lower high, lower low, lower high, lower low. And when it's in consolidation, it's just ranging. It's just going up with no clear direction. Market structure could be different depending on the time frame you're looking at. For example, on the daily, it could be bullish, while on the 1 hour, it could be bearish, and on the 4 hour, it could be bullish, right? Normally, I used to do multi-time frame analysis, but these days, I don't. I just mostly stick with the 1 hour because I've done that before. It's like trading is literally just probability. It doesn't matter what you do or if you do top-down analysis. Once you find your strategy, just stick to that. So for me, the 1 hour is my perfect time frame to get my trades. So all you need to know is like the market moves uptrend, consolidation, downtrend. Another thing I wanted to mention about market structure is the shift in market structure. For example, right here, we were clearly bullish, but when price got to the zone, it created a fake out. For most people, once price breaks this low, they are already bearish, meaning the market already switched from bullish to bearish. But for me, I like price to create another pullback and breaks it. Once it breaks it, then I switch to bearish. And the same thing is also applies here. If you notice, price created this lower high, then this lower low. Price created this lower high, then another lower low, right? Price came back, broke this. For most people, they're already bullish. Immediately price breaks this, they're already looking for buy. But for me, that's not my case. I need price to pull back. Once it breaks it, then I go with the trend from there. So basically, I just wanted to mention that real quick. It depends on the person and the strategy. So this is how I do mine. You get it? As you can see right here, the market is clearly bullish, and the best tool I would suggest for you to really read the market structure is to use this tool right here. It's called, I don't know the name, but it's called PART. You can just literally use this tool to see what the market is doing, so you can determine the swing high, the swing low. And I'm just going to do that right here. So this is the last low. Let's call this the last low. This was the high, this was the low, this was the high, this was the low. If you notice right here, price faked out but never confirmed, and price continued to create the multiple series of higher highs and higher lows. So price broke this and it created a new high, create another low, create a new high right here. I think price broke somewhere here. So this is going to be my high, and this is going to be my low, and this is going to be my high, and this is going to be my low. And I think price broke somewhere here, and this is going to be my high. So this is a perfect example of uptrend. And following, we have a really clear example of consolidation right here. So when the market is moving, it's either in an uptrend or consolidation, meaning it could be in an uptrend, then price gets stuck in a zone which is just ranging, which is a clear example right here. We notice that price is clearly bullish right here, but when it got here, it just got stuck, right? It's not really going up, it's not really going down. It's just, personally, I'm still bullish, but on the other hand, there's no clear direction because price is not going anywhere, right? I do trade this, and I'm going to show you an example on Euro AUD soon. And so this is a clear example of bullish trend, this is a clear example of consolidation, and I'm going to quickly look for a downtrend for you so you just understand. Actually, it's just the reverse of an uptrend you get. So right here, I'm just gonna see. Okay, right here we have a clear downtrend. So what happened was, first we were bullish, right? We were bullish, boom, 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 right? So this was the last time, right? What happened next was price created this. It broke this low, which I would call a fake out, which I normally call a fake out. Created this low, created the high, created the low, created the high, created the low. As you can see, price is clearly creating series of lower highs and lower lows, right? So that's clearly a downtrend. As you can see, it just keeps going on and on and on and on. And the best way to trade is, maybe I'll make another video of this, of how to go with the trend so you can catch beautiful setups. So it keeps going. So this is a really clear example of a downtrend. As you can see, it keeps going down, right? And later on, it switched to bullish, switched to consolidation right here. See, this is literally the movement of the market. First, we have the downtrend. One sec, I'll just move it. First, we have the downtrend. Then we have uptrend. Then we have we have uptrend up to this zone, which is somewhere here. Then we have consolidation. See, it's literally how the market moves. So market structure is key because it tells you what the market is going to do next, right? It tells you where to take your trades from and how to go with the flow. Because there's a saying, the trend is your friend. Never forget that, because the trend is actually your friend. Moving on, I'm going to show you the trade on Euro AUD so we can end this video there. Briefly, this was the trade on Euro AUD, although this is not my exact entry because I waited for a confirmation entry right here. So my stop loss and my entry were different from this, but I'm just going to show you, if you're trading solely based on structure, how you could take this trade right here. So first of all, as we can see right here, price was bullish, got stuck in a consolidation, continued the bullish trend, and again it switched to bearish somewhere here. So if you notice, this was the last low, this was the high, this was the low, this was the high. Price broke this, and then I became bearish, right? So like I mentioned previously, price breaks this is a fake out. The price goes to pullback, breaks the low, that's confirmed for me. So basically right here, I was looking for sells, and this was the last high, which is the swing or supply and demand that price tapped before breaking this low, right? So what I was looking for was the price to come back into this zone. I think somewhere here, I was looking for a trade, but I didn't get some. And another thing is, if you notice that this is a ranging market, pretty much consolidation. Price isn't going up or isn't going down, but the way I trade, I always look for a way for me to get my trades in the zone, whether it's in a ranging market, it's in consolidation. I do find my way around these things, you get me, right? So what happened was, this was the supply and demand that price came in last. So as price tapped in here, I start to look for internal structure within the main structure. First, I know the trend is bearish, and the other thing is I need to look for trades within the bearish trend, right? If that makes sense. So what happened was, price taps into the zone. I started to create an internal structure. Basically, it's like the trend, but a trend within the trend. So it's called counter trend, but I like to call it internal structure. So if you notice, price taps in, creates a low, creates a high, creates a low, creates a high. And what I did was, this was the last high price broke, and I think the trade was on Thursday, if I'm not mistaken. I'm just gonna validate this so you see clearly. So what happened was, like I mentioned, so what I was looking for was price to come back to the last zone. I'm still gonna validate one more, so it will be better for you to see. Okay, so as you can see right here, this is the high, this is the low, this is the high, this is the low, this is the high, this is the low. If you notice, when price broke this right here, I'm just gonna show you one sec. When price broke this right here, right, you can see that, right? Hopefully you can see that. When price broke this, it created this swing high or swing low, and price never came back in. So what I was looking for was a price to come into the zone for me to take it down. So if you see right here, although my strategy is different, I waited for price to come in, then I went to the 5 minute, but we're not going to do that in this video. So what happened was, if you're trading solely based on structure, this is how I would approach it if I was trading based on structure. So once I'll just wait for, so this was the last high, price never came back in. I could literally just set my limit and put my stop loss above this high, right? If you put in it here, it doesn't really make sense because you could easily get faked out and price will easily come to your stop loss, and then you lose money on the trade that could have worked. Makes sense, right? So if I'm trading based on structure, I would just set my limit right here with a 31 pip stop loss. And my target normally is, on my strategy, is 1 to 6, but this, I would be targeting the low, right? I would be targeting the low because there's a probability that price could break this low, but nothing is certain because, but on the other hand, we already know the market is bearish, so price has a potential to come to this low. So that would be my target. My stop loss above this high, I'm gonna take profit in the low. So I'll just play so you see. See, that's a really easy, beautiful trade, right? It took a while, but for me, the trade took a while, but overall, right? Okay, this actually went to stop loss. I think my target wasn't even here. My target was somewhere here. If you want to see this, if you want to see the exact breakdown of the trade, make sure to comment below, and I will do a full breakdown of how I took the trade, everything you need to know about the trade. But this is just me showing you our market structure, right? Hopefully you learned something from this video. If you learned something, give it a thumb up. If you're new to the channel and you love what you're seeing, please make sure to subscribe, become part of the family, and let's grow together. Thank you for watching this video. See you in the next one. Bless.